Welcome to the Strategic Investor. Join us as we interview some of the world's most productive asset managers and uncover sophisticated and unique investment strategies in the markets. Here is your host, Charlie Wright.
Hello and welcome to Strategic Investor Radio on OC Talk Radio, where we bring you investment strategies you are not hearing elsewhere. We'd like to welcome back today Dave Garrett, founder and owner of TimerTrack.com, a subscriber service that tracks market timing professionals. And it's been several years, but this is the second time we've had Dave on the show, and he speaks to us from world headquarters from beautiful Salt Lake City, Utah. Dave, welcome back to Strategic Investor Radio.
Thanks, Charlie, and it's great to be back on your show.
So, Dave, as I mentioned before, I'm a BYU graduate, as is my wife, as several of our children. So you can thank us for the growing economy there over the past few years, you know,
okay.
and we hope that it all continues. So before we start on Timer Track, give us a 90 seconds on Dave Garrett here, will you, Dave? How did you get to where you are today?
Well, I started in the industry years ago in my mid-20s. I'm almost 70 now, so I've been in the business a long time. I started in the industry working for an investment advisor, and he was a tactical manager. It was called Security Funding Corporation. And so he kind of taught me everything I know, and back in those days, I would get on a small calculator that plugged into the wall, kind of hand-sized calculator, and use that calculator with a tape to calculate our timing signal every day. And I'd keep a big log of all that, and we would buy and sell based on an algorithm that he had developed and learned about, and it worked like a charm. It was based on the advanced decline line, and it was simple. We ran a 30-day weighted moving average on the advanced decline line, and when those two lines crossed, we bought or sold.
Well, very interesting. You guys were really in the forefront of tactical investing back then.
That's right. I remember when we found funds that also had money market funds associated with them, no-load funds, and boy, nobody had ever heard of doing this before, and we started doing it, and it worked like a charm for many years. Wow.
Congratulations.
So that's how I started.
Okay. And then how did you gravitate toward Timer Track?
I left him and went on my own as an independent broker with one of the independent brokerage firms, and that was, when was that, early 80s? I started to do that and ended up with Prudential Bates for some years. Left Prudential Bates and went on my own, started my own RIA, basically tactical management, and was there for some years. And I still have my own RIA. It's called Garrett Capital, Inc. But throughout that period, I wanted to use, things change, and I wanted to use other timers, not just my own. Ours wasn't working as well as it did, so I started using additional timers that I found. I was disappointed in a lot of things that occurred because I didn't get what I expected. And so in about 1999, we hired a graduate, an IT graduate from school, and had him build our own website, Garrett Capital, and embed in that site the ability to track market timers. And we had that embedded right in Garrett Capital. Nobody saw it. We used it. We entered the buy and sell signals. We tracked them against indexes or whatever we wanted to track them against. And after a couple of years, we said, gee, we have all this data. There's got to be other people who wouldn't ever use our service that would want the data. And so we kind of spun Timer Track off from our embedded site into its own site. And that's really the genesis of TimerTrack.com. We started taking subscriptions, and people signed up, and we had more and more timers want to be tracked. And so gradually it just grew into what it is today. And it's not as big as it was a few years ago. And I think the basic reason is that the whole concept of tactical management is out of favor right now.
Yeah.
And it's been hard to be a tactical manager right now.
You know, it's got to be cheap and ETF, index, and buy and hold. And that's been the case, after 2009 started running up, and that's the case. But we all know things come and go, and they're going to come much sooner than many people realize here, pretty soon here. So first of all, let's set the record straight. Timer Track. Spell it for us, will you?
It's TimerTrack.com. One word, Timer Track.
Timer Track, one word.
I think if you go to CK, it'll refer you, but it's TRAC.
Okay. So tell us how it works, will you?
It's pretty simple, really. We allow a developer of timing models to be tracked on our site real time for free. So if you're a market timer and you have a algorithm or a method that you use to buy and sell within the market, you can come to Timer Track. We will track you for free. Their requirements are that you deliver to us your signals real time. You can deliver them a number of ways. 99% of those that we track deliver them via email. And we will timestamp that trade when we get the email. So if you send us a trade tonight at 10 o'clock p.m., we'll timestamp that trade at 10 o'clock p.m. You say buy the market. On the morning open or tomorrow's close, you'll get the trade. And once that's timestamped, it's in. We're not going to change it for you the way it is. And so we're pretty hardcore on the concept of you have to deliver them to us for us to track them. We have to be assured that we got it. If we didn't get it, you don't get it. And so we're kind of hardcore on that because it's all we really have to offer is our credibility.
Right.
But we'll do it for free. And we will track you. We'll keep track of it. And then a subscriber comes into the site.
But before you get subscriber here, just a quick question here. Is this retroactive in any way? Somebody comes and says, I've got a 5-year track record here. Can we bring this track record in with us in any way?
Yes, you can do that on one condition. If you can get an AI CPA to verify that you perform these trades real time, we will accept that AI CPA attestation letter, and we'll publish that letter on our site. That's an AI CPA. That is a CPA who's a member of the national, CPA organization,
society,
attested.
Okay.
So under those conditions, I think right now we have one.
Okay.
One timer who has done that.
So that's not likely to happen. So typically when what you call a developer who is an asset manager, comes in and you start from the day that they start with you.
That's correct.
The record starts, okay.
The day they start, we start logging those trades.
Okay. And then the other side are the subscribers. Tell us about that.
So a subscriber pays us for the ability to see everything we've got. The only thing a subscriber cannot see is the most recent trades. Okay. So a developer, and that,
otherwise they'd copy the trades and
right. They don't need the developer. So we protect the developer by allowing him to put on his trade a certain delay. So he says, I want a 3-day delay or I want a 15-day delay. I think they can go as high as 30 days, but most developers are 1 week or 15 days that the delay before that trade is able to be seen or shown to a subscriber.
Okay, so subscriber pays per month, and then quarterly, and they're allowed to see whatever there is on the site. And then how does the developer get compensated? For what?
They don't. They don't get compensated by us. If a subscriber likes what they see, the developer will get a call directly from our subscriber. They're not through us. The subscriber goes direct. We're out of it. subscriber can go directly to the site. Now, one additional thing the developer has, which is really useful, is that he can put on his site what we call the Timer Track medallion. That medallion allows anyone on his site to click directly through to Timer Track and to see just that developer's work as tracked by Timer Track. So if you click on the timer, if you're on, say, a site called, let's say, Sniper, whose bond signals are working pretty well these days, you'll see the Timer Track medallion on the Sniper site. You go, oh, Timer Track. And you click on that, you'll be able to see all of Sniper's work, but not anyone else's, just Sniper.
Oh, I see. Okay. Without being a subscriber.
Right.
Okay.
Yeah.
Okay, I got
being
you.
A subscriber, you can see Sniper.
Okay.
Because you're on his site. Why not?
Right. So would you be comfortable in sharing with us some numbers here about how many developers do you have or asset managers? And I presume many of them have more than one strategy that they publish.
They do. We have. I am comfortable. We have. I should have looked this number up. We have about 500 to 600 strategies we're tracking right now. We probably have an average of 2 to 3 strategies per developer, so we have developers of 100 to 200 that we're tracking. Over the years, we've tracked around 4,000 strategies that have come to Timer Track, tracked them for a while, and left for whatever reason. And usually the reason that they leave is that the performance is not what they had hoped it would be.
Right. Yeah, it's just like professional athletes. As long as they perform, they stay. They only retire because they can't play anymore. So, okay. Now, these quote developers, are they companies? Are there any mutual funds that are on there, or are they just private individuals? A lady in Mexico City, a guy in Albuquerque. Are they primarily Americans? Tell us a little about the developers themselves. They're the asset managers, people, the strategists here.
Okay, and there's some stories here.
Okay, good.
Most of them are individuals who may have small firms, and that they're in the timing business. A lot of them have websites where you can go to their site, subscribe to their service. They email you on a mailing list when they get a buy or a sell. They may have a small organization and 1 or 2 staff members, and they're in the business. We call them pros. They're in the business of timing. Then we have another set of people that are actually asset managers, who actually are RIAs, who actually manage money for a fee. They generally always have a website and they have a staff, and we treat them exactly like the individual who's not managing money. They send us a signal, we log it, and that's it. There are probably about 5% of our developers that are not domestic, not U.S. based.
Okay.
And those who are not U.S. based are primarily in Australia or Europe, or we have, I think, 1 or 2 perhaps in Asia. But they're not very many. Most of them are, and they're individuals too. They fit that same profile. I haven't seen a mutual fund in there, although I have had a number of developers who have been hired away to hedge funds. And
oh, really?
It's kind of interesting because the hedge funds say no more Timer Track. So they have to quit it. That's another reason to quit. I guess that's a pretty good reason. But we've lost a few that way.
Yeah. Dave, if you could speak a little louder here. Salt Lake City's kind of far from Orange County here. So.
Okay. How's that? I wasn't speaking.
Yeah, that's much better. Thank you.
Okay, thank you. And then we have a few kind of larger organizations, some people who do manage as third parties some mutual fund assets. I don't recall an actual mutual fund that we track, but there are people who work with mutual funds that we do track. So I have a story about one individual. I'm not going to tell you his name, but one individual, great guy. And he used to encourage me. He said, why don't you charge the developers? And I'd always drag my feet. I said, no, I don't want to do that. It's kind of a conflict. If I start charging them, they'll put pressure on me to do this or do that. I don't want to take any money from them. And he said, oh, you ought to, $100 a year, that would be nothing. Anybody could do it. Well, I got a call about 6 months later from a mutual fund. And they said, do you know this guy? And I said, yeah, I track him. It's the same guy who was telling me I should charge him. And one of the questions they asked me is, did you get any money from that guy to track him? and I could, in all perfect sincerity, say, no, he doesn't pay me a thing. And they asked me for a verified track record of what we'd had from him and so on and so on. I actually think he's working for that mutual fund or running money for that mutual fund right now. Anyway, so we don't accept money from these guys. We don't accept any compensation. And every now and then I have one of them come to me and say, you ought to do that. And I say, no, I don't think so. And then invariably it turns out that they're glad I didn't for some reason. And I'm glad I didn't take money from them. So it makes it harder to make money when you're not. It's like Moody's. Moody's can charge to the company, give them a bond rating.
Right.
And I don't know how they get away with that.
Yeah, I know. Well, we found out in 2008 they didn't get away with it.
Yeah,
but
right.
They've been doing it ever since here. Okay.
Yeah.
So a subscriber then goes on the site. They pay a quarterly subscription fee, and then they're allowed to see anything and everything on the site. Now, are there conservative investment strategies, or are they all pretty aggressive ones? Do they use futures? Is it the commodities market? Is it currencies? What's available there?
Okay, good question. We get the full range from very aggressive to conservative. The nice thing about TimerTrack is that you can take, for example, there's one we track called Q5 Tracker. So Q5 is an individual. He's not accepting accounts right now that I know of. You could call him if you wanted to and find out for sure. But he has kind of an aggressive signal. But TimerTrack allows the user to apply that signal to conservative assets. For example, the signal is built around the NASDAQ, which is a little bit more aggressive index.
Right.
Well, I can take his NASDAQ buy, sell, short signal. He'll actually go short. I can take that signal and put it on the utilities index in cash. I'm half to short. And by putting that utilities index on his signal, I can see the performance as if he were timing the utilities index. So not only does it run the gamut in terms of their own aggressiveness, the user can become very aggressive, put a guy's signal on a 3 times index, or he can apply the same signal to something very conservative.
Okay, very interesting. And then the subscriber then contacts the developer, and the developer says, I presume that they'll just provide the signal as this one does, Q5 does, or they can do an auto trade arrangement, correct?
If the developer has an auto trade arrangement, they can refer the subscriber to that, but I'm out of that part of it. They may or may not have auto trade yet. Okay,
and then they compensate, then the subscriber then compensates the developer, whatever the developer's fees are, to receive the signals or do the auto trading or however it's involved.
That's correct, and we're out of it at that point.
You're out of it.
We receive nothing from the developer. We don't even know who does that.
Okay, and you don't know how much they charge or anything like that, or is that on the site?
No. Okay. It's on their sites, most of them, but I have no idea. And we provide links to their sites and contact information.
Okay.
But as far as the developer's relationship with the client that contacts them, we're totally out of it. We have no idea.
Okay. So who are the subscribers? Are they institutions? Notre Dame Foundation kind of places, or a State Teachers Retirement Fund of Arizona, or are they just individuals? Are they investment advisors who are using this? Who are the subscribers as best you know?
Good question, and your last phrase was the right one, as best I know, because all we really see is a name and an email address.
Yeah.
That's about all we know from them. Occasionally I can guess who they are by their email address. And so I can kind of guess relatively accurately by saying this. Most of our subscribers are actually professionals who manage money.
Really?
Well,
interesting.
Yeah, in one way or another. We originally designed the site thinking it would be investors, people who want to do it themselves and want to find timers to use. And we do have a lot of those. Mm-hmm. But I think we're going to find that most of our subscribers are pros who are looking for ways to improve their own performance or ways to plug in their clients to something different or tactical or whatever. That's why I can't be more detailed than that, but I'll have the email address.
Yeah, that's a good start here. Thank you. So what, in your experience, first of all, looking at the site, I didn't see contact information. You guys don't answer the telephone and answer people's inquiries that way?
No, we haven't too much in the past. Down at the bottom of our site, there is a contact information, including phone number. But we don't man that phone all the time. It's way down on the bottom. By the way, we are in the middle right now of bringing our site into the modern times.
Okay.
We realize the site is very legacy. It's been there about 20 years. We haven't done much at all with it over the years. So right now we're working on what we call the public site, and then the back end. We're in fact hiring the same guy who's now a big shot with Logitech. He's going to jump in and help us do the back end. But so that's in the works right now. But
okay, good.
You can contact us and leave us a message on the phone, but we generally don't man the phone.
Okay. So how do you understand? Well, what do you do to understand what people's concerns and misunderstandings or misperceptions are about the site, or do you?
Well, we do. We have people who answer emails. I've even called people on the phone to help them out with various issues. So we do try to get right back to people, and most of our inquiries have to do with subscriptions or something like that.
Okay.
Occasionally we have people who don't understand something. We try and call them back and tell them what we can, help them however way we can.
Okay.
Does that help? The misconceptions generally tend to revolve around, I expected to get real-time signals, and I expected to be able to subscribe to them through your site, which we don't do.
I
try
see.
to make it clear.
So it's kind of systems issues and questions and concerns here, things like that. Okay. And what is the bigger challenge for you, to get more subscribers or to get more developers? Because you got to have both, obviously.
Yeah, got to have both. Good question, and part of the answer is that we have done nothing in recent years. TimerTrack's just kind of run on its own. We haven't really tried anything. I think we run a Google AdWord, and we limit it to $100 a month. And once we hit the $100, it stops. I mean, we just haven't done much. It's just kind of run itself. I have two people that help out with TimerTrack. But I believe a lot of our subscription interest is a function of the market. And so in a time like this, when we are all buy hold I blame this largely on the central banks of the world, which have put us in a situation where the markets, look at what we're in right now. I have never heard more negative news.
Yeah, I know it.
And the markets are near highs.
I know.
This is really amazing.
Yeah, it is.
We're in are amazing. And so I think this is why you have so many timers who just can't make heads or tails of the trend or what's going to happen, because it is different.
Yeah.
Way different. And we get negative interest rates in the United States, which I believe we're going to.
We appear to be on our way. We appear to be on our way.
They're coming. Those are coming. If those come, it's going to totally change everything we live with right now. It's going to totally change. So this is an amazing time we live in.
It is. So, Dave, question we'd like to ask all of our guest here. What keeps you awake at night?
Well, timer track is not it. I sensed you might ask that question. Really, timer track is kind of, it runs itself. I don't worry about timer track. We're simply tracking the people and what it is, if you remember that phrase.
Okay.
The things that do keep me awake at night in terms of the economy, and I've got a master's degree in economics, so the things that do worry me about the economy, probably the biggest thing is the coming possibility of negative interest rates. And maybe not at the moment they show their ugly heads. They're already running wild in Europe.
It's 17 trillion now.
It's over.
Yeah.
Yeah. Yeah. It's when it's over.
Yeah, that's right.
Me awake at night.
Unwinding it, no question.
Unwinding.
So, how about a recommended book on investing for our listeners here, Dave?
I have kind of resorted almost exclusively to articles rather than books.
Yeah.
And my primary source is John Molden, just like he's becoming a primary source for so many people because he publishes a wide range of people who agree with him or disagree with him. I read a book about trading a few years ago called Flash Boys.
Yeah, I read that book. Yeah, Michael Lewis.
Okay, Michael Lewis, if profanity keeps you from the book, don't read that book. But,
yeah, that's right.
But the book's about trading, and I think everyone should know that book simply because it opened the door for me into what's really going on, at least at that point in time.
Yeah.
And the implication is there's new stuff going on right now that we don't know about in the trading world.
Yeah, and there are enough prophets of gloom to discourage anybody from getting up in the morning, and that is certainly part of it. Is whoever gets milliseconds. To the trade first, gets in before the others, and they make money, and oh my goodness, it's crazy. Yeah. And the third question we'd like to ask is, what's the best advice about investing you've ever received or heard about?
Oh, the best advice about investing probably came to me from I think it was a two-book set. That I read many years ago. I think it was called The New Market Wizards.
Yeah, Jack Schwager.
Yeah, remember that book?
Yeah,
we had two of them, I think. Yeah. And I think that and I can't remember which trader he was talking about, who he was interviewing, but the trader said, "What I do is when trades begin to go wrong, I cut my investment down." So when he gets in a losing streak, he would immediately begin to cut his investments down. And
the size of each trade, you mean? The size of each trade?
The size of each trade.
Okay.
Go by half or something like that. Some way to take it down to zero. And every time I've done that, it works. I lose less on the losing streak.
Yeah.
You're still alive. The other bit of advice is that if you're good at timing, you don't need to invest to bet the ranch. If you're good, you can start small because your small investment will be big sooner or later. So if you're really good, you don't need to bet the ranch. You can start very small because if you're good, that small is going to get big.
I really agree with that and try to practice it myself. And what makes total sense there is the fact that when, as I've heard stated more than once, it's not the size. It's not the size of the loss. It's the size of the trade that kills people. And it's not that they lost 65%. It's that they invested way too much and lost 65%. You can lose 65% if you're investing 1% of your portfolio, right? I mean, it's not that big of a deal. And so that is so important. And there are so many people I have met after the fact, that they were just dumb, and it wasn't so much that the percentage they lost, but they had invested too much. So, thank you very much for that. So Dave, for those who would like to know more, timertrack.com, track with a C.com, and they just go on there and look, and it'll tell them everything they need to know, really. And if they do have any questions, they can reach out to you guys according to the website there.
Yep, and that's it. We welcome anybody to jump on board, give us a try, and people who subscribe generally get what they want. They might go away for a couple of years and then come back. They do their evaluations on timers. They pick the ones that they want, then come back a few years later, take another look, see what's new.
I see. And if we can ask, a subscription per quarter is about how much?
Per quarter is $75, and that would be what we'd call a trial subscription, $75. And, oh, by the way, in the next few months, we're coming out with a trial subscription, which will be 10 of the signals only. So you can only 10, and that will let you play around with that, but that'll be our trial.
Okay.
A year is about $150.
Okay. Well, Dave, thanks very much for joining us today. You've got a very, very interesting site and business model and everything, and I'm sure there are thousands of investors who've appreciated over the years this opportunity, and we wish you and Timer Track continued success here. Thank you for joining us today.
And thank you for having me on. I appreciate you and Paul. You're always great to talk to, and I think you got a great show, and so good luck to you too.
Hey, thank you very much. You put a good Irish Catholic and a good BYU boy together, and you never know what you're going to come up with here. You know?
Yeah, okay.
So again, we've been talking with Dave Garrett, founder and owner of TimerTrack.com. You've been listening to Strategic Investor Radio on OC Talk Radio. We'd love to have you contact us at info@strategicinvestorradio.com, and you can go to our website to hear podcasts of all of our interviews and shows, strategicinvestorradio.com. I'm Charlie Wright, wishing you an enjoyable week and productive investing.
Strategic Investor Radio is a production of OC Talk Radio and is provided for educational purposes only. Content of this program and the views of the guests should not be considered as recommendations by OC Talk Radio or investment advice from the host Charlie Wright or any other entity attached to this production. Investors should always consult qualified financial, investment, tax, or legal professionals prior to investing.